Welcome to Leaders of Tomorrow, the only show in Indian television where you, the MSME, get center stage. This is ET Now's special daily initiative to give MSMEs and entrepreneurs the opportunity to be front and center in every industry and area that matters to you. Tonight on the show, we have experts answering your questions, and our small giant tonight is Epigamia. That will be coming up in just a bit. Gentlemen, as always, thank you so much for taking the time to be here on the show, and Uttam, it's good having you with us for the first time tonight. Let's kick tonight's show off then with this first question that's coming to us on our social media pages. You can tweet at me or at our official Twitter handle, and at the end of the show I'll tell you how you too can reach us. Our first query tonight is coming to us from Sundar Armugam. Sundar has tweeted at us to say, as an entrepreneur, he's able to visualize his project, but the growth has been slow. His question or his concern is that investors or bankers see only the papers, not my vision, personal motive and achievements, turnover, IT papers, bank statements, CIBIL score. These are the only 4 questions which are considered by bankers, is his concern. Despite programs like Make in India, there's been no real guidance available. It's a sad state of affairs, of course, but one would be, let's break it up into 2 parts. One is on the banking side and one as far as mentors are concerned. What would you gentlemen have to say to him about fundraising and also about the guidance he's asking for?
Yeah, I think when a bank puts in its money or the investor puts its money, the bank wants its money back with interest. Investor wants its money back with return, and therefore they will look at the financial statements, the credit scoring and things like that. They won't just look at the vision that you have in your mind, and therefore I think initially one should not look for at the idea stage for external borrowing from banks or external agencies. One should put in one's own capital, raise some capital from friends and relatives, and at a later stage you should look at angel funding or venture capital funding, and then banks or NBFCs. With regard to guidance, there are multiple agencies which can help. There are SME chambers, there is dedicated branches of commercial banks catering to SME sector, NBFCs are there are industry commissioners, and a host of other agencies providing guidance. Okay,
so there is definitely organizations that he can approach for this information.
Yeah, to add more to what Mr. Dalal said, there are a lot of young age entrepreneurs that you see are budding now. So of course they will not have a lot of financial background which will come up with there, but if you are having a strong idea which is backed with an execution which can deliver in a period of 3 to 5 years something, you have a lot of investors which are there. Investors are there in the community itself. A lot of people like us who come from the college, our own fraternity, our own the people who have passed out from our place, a lot of people are there who are ready to fund a lot of good ideas which are there. So of course, as in continuation to what Mr. Dalal is saying, initially the challenges of having a right financial report or a CIBIL score and all those things will be a challenge, but if you are backed with a good idea which is a good executionable idea, you can have a lot of fundings available, and in a shorter run of time or to start with, one should look at figure out those things. And once you have set a base in place, when you have to exponentially take it forward, then the real funding or the market comes into the picture and we should take benefit out of it.
Okay, so perhaps then your advice is also don't get so caught up with the definition of say VCP, etc. Whoever is able to lend you funds, you should be looking at tapping into. Sundar Armugam, that's in response to your question. Thank you very much for sending us that tweet. Let's quickly move on to our next query. This is also coming to us on social media. Leaders of Tomorrow ET Now is our Facebook page. If you have any questions for us, Deepak Agrawal has sent us this question to say, bank lending is always focused on big ticket turnovers and neglect nearly 80% of the economy, which are SME, small and medium businesses. Small and medium enterprises are the backbone of the economy, but always fight for financing always fight for financing from banks. His question tonight to both our experts: what do we do to ensure funding for projects on time? And Mr. Dalal, we have spoken multiple times in the past about the CGT MSC, for instance, what they can do in terms of mudra, etc., by way of raising finance. Your then maybe one line answer, because we have discussed this quite a bit. to someone like this to say that funding is coming into the industry?
See, MSME sector no doubt is the backbone of the Indian economy. They contribute, I think they provide employment to 80 million people, 45% contribution towards manufacturing output and 40% towards exports. But having said that, it is also a fact that about 87%, as per a report, 87% of the 26 million units do not have access to formal sector like institutional finance. And for that, there are two schemes which you mentioned just now. Like one is CGT SME, wherein the primary lending institutions like banks and NBFCs, they can provide finance up to 2 crore rupees without insisting on collaterals. Likewise, there is a Mudra scheme for micro units where they can avail loans up to 10 lakhs. And I believe that crores of loans have so far been disbursed under Mudra scheme, that is funding the unfunded micro units. So there are schemes where one can avail of finance without having to provide collaterals.
Okay, sure.
And moreover, to add to what Mr. Dalal said again, government is willing to spend more towards bringing in all these next stage entrepreneurs, all these MSMEs into the forefront. That's where the underlying principle of Make in India comes into the picture. So if you look at the latest guidelines which are published by RBI also, there are certain sections which are focusing specifically on a certain portion of money focusing towards all these financial institutions to spend towards these MSMEs and growing them and helping them. So I again say, while the question says that banks have not been really encouraging about it, but I think again I would come back to my first point which I said, if you are backed with the right idea, with a clear execution plan, I don't see a challenge. It has to be something, because again anybody who is giving you money would look for a return in the process, and the way all these, the contribution from the MSME sector has been, it cannot be possible if there is no funding available in the market. But definitely there is funding there, it's just that you have to be at the right time with the right portfolio to put in forward, and the things will flow. So there are separate bodies which are governing it. There is a task force which monitors all these fundings which are there. So government is putting special efforts to ensure that the right funding which they've allocated in the budgets also flows into the right sector.
Sure.
So that should not be a challenge.
Okay. So do then perhaps look at the idea that you have and in terms of its execution as well, what needs to be done if you're saying that raising funds is a challenge. Deepak, thanks very much for sending us that query. Let's quickly move on. Our next query is coming to us via tweet from Daulat Medhora, I beg your pardon. Daulat has tweeted at us to say, our working capital is affected by late refunds, initially of VAT and now GST. Interest rate for MSMEs, he says, should be lesser than the current ones available. Ease of doing business is not felt by MSMEs, especially those who are in the export segment. Maybe I could come to you you know, interest rate specific to MSMEs is a great idea. SOPs or you know, any sort of subsidies that can be given to MSMEs, of course, great idea. But he's talking about lower interest rate only for MSMEs and SMEs. Your opinion?
As far as paying of taxes, GST is concerned, government, while from the time they have launched the GST scheme and everything, they have made a lot of improvements in the process, which is helping all these MSMEs to do a better business.
Sure.
There are a lot of composite schemes which have come up. For companies having a turnover for up to 1 crore, you can have a flat 1 to 5% of payment done without getting into a lot of the paperwork, the process. Or for companies which are about 1.5 crore in the term of a turnover, they can do their entire GST process once in a quarter. So you end up getting into the cycle of a monthly transactions, which does help in getting a lot of working capital in place, which takes care of the need which is in the third month. A lot of relaxations are in place. So while interest is a specific question, getting it without going there, I'll say that the entire working capital management can be done if you look at the entire picture of doing the transactions in a very holistic way.
All right, that's a great answer. Sure.
Yeah, to the specific question about not getting refund under GST, especially for exporters, yes, this has been a problem, but GST is a major tax reform that has been introduced by the government. There have been some initial glitches which are being ironed out, and I hope it is done sooner than later. And this problem will be taken care of because GST Council and everybody is concerned about it. Second issue is regarding the lower interest rate for the MSMEs. So interest rate, I believe, is a function of the cost of funds to the banks or the lenders, and like risk premium. The higher the risk, the higher the interest rate. That is a basic principle of banking. So this clamor for lower interest rate doesn't make up a big, doesn't contribute much towards profitability, and therefore, to the extent possible, I think one should accommodate whatever interest rate is available. But if lower interest rate is given by the banks, it is always welcome.
Okay, so Daulat, in response to your question, our experts are of course saying it has nothing to do with your profitability. So do look at how you can maintain your profitability, and one of those things is also how you manage your working capital. Gentlemen, out of time on the show. Thank you both very much for coming tonight.
Thank you.
Time for a break. On the other side, Epigamia is a small giant tonight. Do stay tuned. You're back with us here on Leaders of Tomorrow, and tonight on Small Giants, we're turning the spotlight on Epigamia. No industry in India perhaps is changing as much as the FMCG and food space. With its innovative marketing and branding, one such company is Epigamia. That's a small giant tonight. Karishma Manjani caught up with this company to understand how they're making inroads in this space. Take a look.
She let go of about 143 kilocalories, 18 grams of carbs and 7 grams of fat simply by picking a healthier alternative. Just like her, India is filled with millennials that are looking for this alternative that's both tasty and healthy. Cashing in on this very trend are today's entrepreneurs. Catering to the millennials' need to eat healthy while on the move is a startup in focus today, Epigamia. It manufactures flavored premium yogurt that works both around concerns and desires. It's a choice that's changing the dairy industry. Let's start by understanding what made you enter the branded dairy product space, specifically the Greek yogurt segment.
So, the journey began a couple years ago. I had come to India and as a hobby investment, I had invested in an ice cream parlor called Hokey Pokey. And I love telling the story. There was no business plan or vision or scope. It was a simple hobby project, passion project. And at the same time, I realized that there was an amazing scope in the future to build a brand in India. And from the ice cream business, we translated into the Greek yogurt business, and that's where we are now.
Let's talk about Hokey Pokey then. It was an ice cream parlor that counted as one of the favorites for majority of Indian consumers, but it shut down a year ago. What led to its downfall?
So I wouldn't call it a downfall per se. I think the business was doing decent at its, in its own height. The challenge for us was scaling it up. I think, to move it at the progress and the pace that I wanted or I had sort of envisioned, what we wanted to achieve in 5 years, we realized it was going to take us 15 to 20 years. And the reality was, it was a little bit of a lapse on our part to look at, to not look at the seasonality of the business. Coming from a place which has really hot and really cold weather, something that I didn't take into account when we were here. And that's where Epigamia actually got born. And Epigamia was supposed to be a complementary product to Hokey Pokey, to the ice cream business. And we said, let's look at a product which is consumed every day, does not have much seasonality around it. Looked at the nutritional aspects of what was happening with the consumer in India, and we launched Greek yogurt. And the second baby just took off.
So Epigamia was launched in 2015, and in a short time it has gained traction amongst majority of Indian consumers. So what is the differentiation? What is the USP against legacy players such as a Nestle or a Danone?
So I think the reality is, and I say this just not for our company, but for most of the FMCG startups and to the aspiring startups out there, I think we have one edge that no one else has, and that's that we're nimble. You know, we have the ability to listen to the consumer, to roll out products extremely fast, take it back. We can get a feedback yesterday, and in 3 weeks we can have something on the shelf. Okay. I don't think the big guys have that ability today, and they're a little far removed from what's happening on the ground and the reality on the ground.
So it's not just consumers, Epigamia has attracted a wide list of investors too. So let's put a spotlight on why they thought premium branded yogurt space was a space that they would like to explore.
So I think it's a massive market to begin with. I mean, the overall, I mean, the dairy space is 80,000 crore market in India today. And I think within that, there's a lot of room for us as a branded FMCG company to come in and create some buzz. And really, when we look at what we're trying to do, it's a very old industry. It's been around for a very long time. We're trying to bring a modernization to the industry, a contemporary look to the industry. We were fortunate enough to have some amazing partners like Vril Invest and DSG Consumer Partners, who really understand our space. They understand our space better than I think most people do in this country as investors. And they understand the team, myself, they understand our vision, and they're completely aligned to that vision.
So I understand that you're a new age startup and that's your USP, but your price points, they aren't really pocket friendly. A 90-gram pack comes for ₹40, a little less than $1. Does that narrow your consumer base?
I think it goes both ways. It's not about narrowing consumer base. I mean, we are speaking to a new age premium consumer. But the reality is, it's not about price sensitivity so much. It's about the value proposition. You know, what is it that we're offering to the consumer, and why are they willing to pay that price point? And if you look at our cup of yogurt and you deconstruct that yogurt, try to make something like that at home, I think immediately the consumer realizes the value proposition. And this is a challenge that, you know, I tell any entrepreneur out there. You know, I was told by so many people that, you know, there's no way at this price point it's going to work. Today we're distributed in 8,000 stores across India, and I think we have a very long way to go. But I think it's pretty compelling.
So as we're talking about the value proposition, how important do you think packaging is for consumers?
So packaging is extremely important. You know, unfortunately, whether it's India or the rest of the world, we do judge a book by its cover. And what's inside, of course, is going to differentiate yourself. But to get inside, to get that consumer to try that product, the packaging has to really speak to the consumer. You know, on that shelf, it has to cut through the clutter. And the messaging has to be so precise that the consumer actually is willing to pick it up and try it. So packaging to me is the ultimate. Okay,
let's round back up to the investor funding. How have you essentially profitably utilized these funds?
So I think for us specifically, and I can speak to what we did, and you know, there's a learning in it. I think the key was sort of bringing on some talent. So bringing on some management bandwidth, bringing on the right people to help us scale the business. And I think, you know, as an entrepreneur, you start off doing everything. I mean, I was the guy going door to door selling this product. I was the CFO, I was the CMO, I was the CEO. I have some co-founders in the business who helped as well, so we were sort of doing everything at one time. Now when we're sort of growing, we realize we need to bring in guys with experience, expertise, people that are far smarter and brighter than I am. And I think that was really important for us to do that. And that's where I think the funding has helped to bring folks like that on board, so we can really take this to the next level. As entrepreneurs, you're always throwing darts and learning. I think here you bring in talent that knows what dart to throw. So I think that helps in a big way. Secondly, for us was sorting out our manufacturing and supply chain. You know, so far we've been sort of doing it, again, as entrepreneurs, very lean, working with third-party vendors, etc. So I think the focus now is to build our own manufacturing and really develop our supply chain deep. So these are the two sort of prime areas for us to make investments in.
So the cold chain sector has been attracting high number of investors, and we've seen a lot of consolidation happening. It is dynamic. But what is the one thing that you like to see changing in this sector that could boost Epigamia's growth?
So I think we see the changes happening, and I think it's getting better and better. So I think it's just this whole overall move from unorganized to organized. Because in the unorganized sector, what ends up happening is there's a margin loss. There's too many inefficiencies, so there's overspending by too many people. And as we sort of consolidate, I think there's going to be a lot of efficiencies and a lot of growth for industry as well as for consumers. And I see a lot of that happening. Things like just the overall dairy industry, milk, milk supply, and all the challenges we've had, getting good quality milk, because it's available at the source, but when it finds its way to the consumer, it tends to get some issues put into it in the supply chain. And I see a lot of those changes happening.
Okay.
I think GST has been an amazing sort of boon for the industry because of just movements of goods across the country. I know there's been some downsides as well, and even we face some challenges in adapting, but as an overall long-term view, I think we're very positive on it.
As per industry reports, India's flavored frozen yogurt segment is going to reach rupees 1,600 crore by fiscal 2021. In the light of this, how do you plan to tap the opportunities in the sector in the coming 5 to 10 years essentially?
So for us, the real challenge today is the cold chain. Our product is all natural, no preservatives, no artificial ingredients. And if not kept in pristine and perfect temperature, it can go sour, it can go bad really fast. Again, because of us being true to the nature of the product. And the cold chain industry is still very nascent in India, and I think we've invested heavily in making sure we develop that cold chain. And cold chain is a huge challenge, but for us, that challenge is the opportunity. And if we're able to capitalize on that challenge, I think we can really scale our business to new heights.
Thanks for talking Leaders of Tomorrow, Rohan.
My pleasure, Karishma. Thanks for having me.
Considering that the dairy industry has remained relatively stagnant in terms of delivery and options over the past few decades, it's interesting to see startups such as Epigamia facelifting this space. Overall, the future looks bright, but the only question is, how far do you think these new age startups can go?
Completely out of time. If you have any queries for our experts, do remember you can write to us at leadersoftomorrowtimesgroup.com, on social media, tweet at us at Sunanda_J, which is my personal Twitter handle, or LOT_ET now. You can also write to us on our Facebook page, Leaders of Tomorrow on ET now. Do leave your comments, queries, questions, feedback. We love hearing from you. Thanks very much for watching. Have a good night.